Earlier on, Stats SA announced that consumer price inflation came in at 4.4% year-on-year in the month of August. That's a deceleration from 4.6% in the previous month. For more on this, we now speak to Professor Andre Roux. He's an economist at Stellenbosch Business School. Thank you very much, sir, for joining us. Now, inflation appears to be decelerating at a faster pace than what people had really anticipated. Were you surprised by this 4.4%, especially because now it comes below the Reserve Bank's preferred 4.5% target?
Hello. No, not entirely. The market did expect something below 4.5. In fact, some were looking for 4.2. Not a major surprise. Bear in mind, of course, that it is being favored by the lower fuel prices and also by the firm exchange rate. Those two are helping a great deal in bringing down the rate of increase.
Now, while the consumer price index has slowed in August, we do see that food inflation has ticked up somewhat. How concerned are you about that, given the fact that, of course, South Africa's poor spend the bulk of their money on things like food and transport?
That's exactly the point. You're quite right. I mean, if we have a look at inflation rates for different segments of society, then, as you quite rightly pointed out, for the poorer members of society, food makes up to 50% of their inflation basket. So if the food prices are rising rapidly, the price of the entire basket will rise at a faster speed than for those who are relatively more well off. So yes, it is concerning that food prices are rising, but nonetheless, still at around about 5%, which is better than what it was just a couple of years ago.
Yeah.
So I think let's look for the positive. At least the rate of increase is slowing down.
So, of course, the lower inflation situation now begs the question about the level of interest rate cut that we're going to see tomorrow. Of course, I suppose much will depend on what the US Fed does tonight. But then, of course, traditionally, the Reserve Bank has been seen as quite a conservative body.
Yes. Yes, I think you're right. I mean, the dice are loaded in our favor if you want lower interest rates. So we have, you just pointed out, the lower inflation rate coming in at just below the center of the target range. We have the firmer rand I mentioned a bit earlier. We have the prospect, by the way, of a further drop in fuel prices next month, up to R1 or more per litre. And we have the pending decision by the Federal Reserve. There seems to be absolute agreement that rates in America will drop. Only questions by how much, 25 or 50 basis points. I think either way, we'll expect an increase tomorrow here, but not by more than 25 basis points. I think the Reserve Bank will continue to err on the side of caution, bearing in mind if we lower interest rates too rapidly relative to America, that might have a knock-on effect, a negative knock-on effect for the rand. And we don't want to lose that current, let's say, advantage.
So if, say, the Federal Reserve is quite aggressive in its rate-cutting approach over the next coming months, and the SARB is less kind of aggressive, would that then put us in good stead as South Africa in terms of the value of the rand and make us more attractive for investment, et cetera, et cetera?
Well, I'm afraid I have to say, all things being equal, yes. Obviously, so many other factors can also impact on the rand. But that on its own would be more positive for the rand. Wouldn't necessarily mean the rand will strengthen, but it would slow down any possible weakening of the rand. So yes, to answer your question, yes. And of course, that has a further knock-on effect. A firmer rand is also good for our own inflation rate. You know, bear in mind, up to 30% of what we buy in this country is imported. So a firmer rand or a more stable rand helps to slow down the effect of imported inflation.
Yeah, I have to ask you this, since you're an academic. We've heard about the Reserve Bank agitating for a 3% point target in terms of our inflation, as opposed to the 3 to 6% target range. Do you think that this is realistic, given the direction that we're heading in, and most importantly, whether it's actually sustainable?
Yeah, I think what they're aiming for is a range from 2 to 4%, which means 3 in the middle, yes. Yes, they mentioned that. I haven't heard much of it in more recent months, but certainly earlier this year and last year, it was on the table every now and again. My own personal opinion is no, I don't think we should aim for that. I think we should keep things as they are, because to obviously reach a 2 to 4% inflation range target would require much higher rates of interest, which right now we can ill afford. Right now, by the way, I think let's look at the fact we are observing a few tentative green shoots. So we've spoken about the firm brand. We've had electricity for more than 150 days uninterrupted. We have the drop in inflation. We have a new government, GNU, which so far so good, has pleased markets. At the same time, we do obviously have low growth, high unemployment, high poverty. I think the current policy mix and objectives are probably most suitable at the moment. I think trying to force an even lower inflation rate would probably do more harm than good.
Professor, thank you so much for your time and your insights. That was Professor Andre Roux, who's an economist at the Stellenbosch Business School, and we're going to take a quick break.